Good morning, and thank you for standing by. All participants will be able to listen only until the question and answer session of today's conference. At that time, if you would like to ask a question, you may do so by pressing star, then 1, and by recording your first and last name clearly. Today's conference is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the call over to your host for today, Ms. Barbara Lapini. Ma'am, you may begin.
Good morning to our participants in the United States, and good evening to our speakers in India. Thank you for joining us for our webinar on getting your products into India and understanding Indian customs. I'm pleased to note that we have more than 80 people registered for the webinar today. My name is Barbara Lapini. I'm an international trade specialist with the India Business Center of the Trade Information Center. The Trade Information Center is part of the U.S. Commercial Service of the Department of Commerce. I'd like to welcome all the U.S. Commercial Service clients and other webinar participants in the exporting community who are joining us from across the United States to learn about Indian customs. Our speakers include Dr. Abdul Sheikh, Senior Economist with the India Business Center of the Trade Information Center, Ms. Eileen Nandi, Principal Commercial Officer with the U.S. Commercial Service in Chennai, India, Mr. Vijay Anand, Customs Manager for India with Expeditors International, Mr. Vimal Rath, Manager of Planning, Engineering, and Operations Support with FedEx in India. All the speakers will be available at the end of the presentations to answer your questions. Contact information will also be provided at the end of the webinar if you have any additional questions after the event. For those of you who just joined, you can still log on to the webinar by entering the URL, website, and passcode provided as per the instructions that were sent to you by email. We do have a few housekeeping details to make sure that everyone gets the most benefit from today's webinar. As I mentioned, you'll be able to hear the presentations via your telephone and view it simultaneously on your computer. If you are not hooked up through both, please take a moment to do this. If you're experiencing any technical difficulties during the webinar, please press star 0 anytime during the presentation. We are planning the question and answer session at the end of all the presentations, so please hold your questions until the end. This will be operator assistance. The operator will put you in queue to have your line taken off mute to ask a question. Now, without further ado, I'd like to introduce our first speaker, Dr. Abdul Sheikh, Senior Economist at the India Business Center. Abdul?
Thank you, Barbara, and good morning and good evening to our speakers in India and all the folks who joined us from the United States. As Barbara said, that we have an India Business Center which is opened recently because of the significance of doing business in India, and more American companies and clients are looking for information. So today's focus is more how to get your products across the borders in India. But before that, we focus on it, I thought I will give you a kind of a brief overview of opportunities and challenges of doing business in India. The first thing is why we need to focus on India. You know, India is considered one of the mega markets and one of the BRIC countries where the United States is focusing on increasing exports, and India is one of them. And it is one of the fastest growing free market economy. For the last several years, it has been growing very rapidly. Even during the time of world recession, India continues to grow. And Indians are looking for U.S. products because the U.S. have competitive advantage in large number of products that you folks in America produce them. This is a map of India, and you can see India has 29 states and 6 union territories, and southern part of India is more prosperous and industrialized, so obviously the markets are more fertile. And then the western part of India is also more prosperous and industrialized as well. So we have several of these trade missions that we undertake from time to time to take American companies to India. The few facts, I think many of you may be familiar with that. India is very highly populated. It has more than 3 times of the U.S. population, close to 1.2 billion, and with the 1/3 of the U.S. territory, so you can see the congestion when you go to India. It is the 6th largest country in terms of purchasing power, and more strikingly, it has a large and growing middle class population, which is a very good market for U.S. products. And it is easier to do business in India because English is widely spoken, and English, I think, the Britishers have left one good legacy, that is the language, so they really enjoy the fruits of that. India's GDP has been growing rapidly, as I said, and more than 100 Fortune companies have their R&D operations, so because India is now considered to be the intellectual capital of Asia. As I said, that we have a website, export.gov/India, and this is the India Business Center. Everything that you want to know about India and doing business with India, and that information is available on this website. And we update that with the help of our colleagues in India and also other organizations in India as well as in the United States. So if you want to start from the beginning, then you can understand what is the basic of exporting, how to start trading with India. And we have, last time I was looking at, there were more than 4,000 market research reports on various industries that are also posted on the website. And you can also find the duties and tariff, because that is one of the important components that you need to know how much India taxes or levy tariff, because it is a very complex mechanism, and still India is one of the higher tariff countries. We also post all the trade events in any places that is taking place, and the trade missions. I think importantly for you, if you are looking to sell products, we also have trade leads on that, and we post webinars as well. India is a growing market. Nevertheless, it is only the 17th largest export market, as you can see. That, of course, our neighbors are the largest exporters, followed by China. And India is 17. But I think what is important is the rate at which India's U.S. exports to India is growing is more important. And as I said, that it's a rapidly growing middle class. I think one of the important features of Indian economy is that it is driven by domestic consumption, unlike China. As you can see, 62% of the GDP in India is due to private consumption. So they are consumers, and they are looking for various products and services that the Americans make. And 71% of the population is under 35, and they are very internet savvy, educated, and they are looking for American products. And it is a growing market. It also is very challenging, and private sectors and entrepreneurship is also growing. So there is a great opportunity for alliances, joint ventures for American companies if they are looking for it. And we have a network to assist you both in the United States and overseas. We have trade specialists in 108 U.S. cities. I think many of you have joined from different cities in the United States. We have a local district export centers of the U.S. Department of Commerce Commercial Service. We also have 150 posts in 80 countries, including in India. I think Eileen will talk about more of those offices in India, how they can help you. Now, these offices, both in the U.S. and overseas, can help you to locate international buyers, distributors, and agents, provide expert help at every stage of that, and also help you to enter the market. So we are here to help you, and I think I also want to mention at this point that we have a toll-free hotline that you can call in. A live person will answer your questions. And that number is 1-800-USA-TRADE. And this is the commercial service. I think I will let Eileen talk more about that. Now, even though the opportunities are striking in India, but there are also a lot of challenges, and you have to be very careful in doing business in India. Today, there is a lot of government interference at all levels. As I said, there is a high tariff and access to indirect taxes. Some restrictions on foreign investments, although they are liberalizing, and more American companies are opening up for business, including Walmart has opened a wholesale outlet in Gurgaon. There are also some problems in terms of the intellectual property, so you have to be careful if you have an IPR or patent and trademark that you want to protect it. It is also a problem in India doing business because lack of infrastructure. Even though it is growing, the airports are multiplying, more passengers are traveling, but still getting from one place to the other. And if anyone of you have recently visited and traveling by car from one location in a city like Bangalore or Mumbai or New Delhi, you find that the traffic congestions. And to add that, I think the Tata has added a new small car, so more and more millions of Indians are planning to buy that. And it costs only $2,500. There's still some corruptions and custom regulations, and my colleagues who are experts from India will talk more about the custom regulations in a few minutes. And to facilitate, I've listed some of the tips for doing business in India, because it is important to find a good partners. We can help you to do due diligence and screen out from the good from the bad, and so that you can deal with the companies or the parties where you want to do business. We can also help you to understand the market and competition, because we have market research reports. We have folks in India. Commercial service can help you as well. It is important to do good planning and aggressive due diligence, but it also needs patience and commitment on your part, because things don't happen as rapidly as we are familiar in the United States. We don't get instant results in India. And you need to get export counseling. We are here to help you, and you can call Trade Information Center, India Business Center at 1-800-USA-TRADE. And it is equally important to understand the rules and regulations and standards, and they can be very complex, and unless you know those regulations, it is very difficult to be successful in India. And especially the documentation, I think the customs require extensive, which has problems in free flow of trade across the borders. There are complex tariff structure, multiple exemptions, and there is also various export promotion programs, and the enterprise zones where you locate your company, and all of that information is essential. These documentations I'm going to skip, because I think our custom people will talk more about that. Now this is the last slide. That is the World Bank conducts surveys of all the countries in the world to determine how easy to do business in India. And India has made significant progress from 2007 to 2008, but still it is a long way to go. Particularly, the dealing with licenses, and you're taking the products across borders, which has trading across borders, as you can see, was 142 ranks, but it has gone to 79. So there is a significant improvement, and India is trying to improve their customs, other regulations besides other problems that they encounter, because they are now realizing that unless they improve these regulatory environment, it is very difficult to attract foreign investment and foreign businesses. So that is kind of a quick overview, and my colleague from Chennai will give you the view from the Indian side. Thank you very much. And
thank you very much, Abdul, for that very interesting presentation. And now I'd like to introduce Eileen Nandi, the Principal Commercial Officer with the U.S. Commercial Service in Chennai. Eileen?
Thank you, Barbara and Abdul. Good morning, everyone, and I'd like to thank you all for joining us. I'm going to just talk very briefly, since Abdul gave an overview of doing business in India, of how we can help you succeed in the market. I'm having trouble forwarding my slides.
Hang on, Eileen. Let me see if I can. Here you go.
Thank you. Basically, we are part of the U.S. Department of Commerce. We work closely with our colleagues in the Indian Business Center, and we are here to help you make sales to the India market. Next slide. We have offices in 7 cities throughout India, and some of the major ports that we work with are here in Chennai, Bombay, and of course the capital city, Delhi, where a lot of cargo flights arrive in. But there are minor ports all throughout the country, and of course most of the all the major cities and many minor cities have international airport facilities. Next slide. This shows you the Indo-U.S. trade. You know, before 2001, people used to joke that trade was as flat as a chapati, and then you can really see how it's taken off. Where every year the bilateral trade would increase by 20 to 30%, and so now it's a very robust $44.5 billion. 2009 has shown a little bit of a weakening of about 2.9%. But what's important to remember from the Indian perspective is that their Indian exports to the United States have dropped substantially. This afternoon, I happened to spend most of my afternoon actually at the customs office here, and they said that Indian exports to the United States were down by as much as 40%. This could actually explain why we're seeing a little bit of an uptick in terms of customs issues. Although I have to say I've been here in Chennai for 1 year, and I just had several issues pop up in the past week. So I'm not sure if it's they have more time to scrutinize the incoming or even outbound shipments, or what that issue is. But we are seeing an uptake. Next slide. And this is just showing investment, U.S. investment in India. And what's interesting here is that the smaller portion, you can see Indian companies are increasingly more confident on the global stage and investing more in the United States. Next slide, please. So we can help you basically by doing matchmaking, working at trade shows and missions, counseling, as Abdul mentioned. And if you have something stuck in customs and if you can't get it out, give us a call, and we can help work with our partners here to find out what the problem is and get it. Because of course nobody wants to pay demurrage charges, and everybody wants to get their shipments released. So we can help you do that. Next slide. Again, my contact information will be released at the end. I just wanted to make this short and sweet because I know you're all here to listen to the service experts. So please contact us if you have issues or need any assistance in selling to the Indian market. We'd be very happy to help you. Thank you.
Thank you, Eileen, for that interesting overview of what the U.S. Commercial Service can do in India to help U.S. exporters. Our next speaker will be Mr. Vijay Anand, Customs Manager for India with Expeditors International. Mr. Anand?
Yep. Morning, ladies and gentlemen, and thank you for giving us this opportunity. Let me give you an overview about Indian customs brokerage setup. I think the slide is not moving. Barbara?
There we go.
Okay. Just to give an idea about the agenda of this presentation is, first one will be an overview about the regulatory for customs. The next one is about understanding the Indian duty structure. The next one would be the requirements to do EXIM in India. What I mean by EXIM here is exports and imports in India. And then import customs clearance process and export customs clearance process and special schemes available provided by the Government of India and the special privileged areas. So let us see the regulatory first. The Indian regulatory is called Central Board of Excise and Customs. They formulate the policy concerning the levy and collection of, customs and excise duties, and also to prevent the smuggling and administration of matters relating to customs and excise, central excise and narcotics. And they are the administrative authorities of Customs House, Central Excise Commissionerate and Central Revenues Control Laboratory. They come under the Ministry of Finance, and under the Ministry of Finance we have three departments. The first one is the Department of Economic Affairs, the next one is Department of Revenue, and the third one is Department of Expenditure. CBEC, the Central Board of Excise and Customs, comes under the Department of Revenue. The next one, please. Just to give an idea about the customs duty. Customs duty is kind of an indirect tax which is realized on the goods of international trade. In economic sense, it is also called as the consumption tax. It is a duty levied by the government in relation to the goods which is imported. It is also known as the import duty. In the same vein, duties realized on export consignment is called export duty. There are certain items, when it gets exported out of India, it attracts the duty. Tariff, which is actually a list of commodities along with the leviable rate of customs duty, is popularly understood as customs duty. And there's also another one called the excise tax, which is basically for goods when it is getting exported out of India. And these are, the levied on the manufacturer of goods when these goods leave the place of manufacturer. Because earlier it was known as Central Excise Duty and also known as the CENVAT. Manufacturers are allowed to offset the duty paid on materials used in the manufacturing process by using the duty as a credit against the excise tax through a process known as CENVAT credit. What it means is, like, if you import a good into India for the raw materials and if you have paid a duty for it, and when you export the finished good, you can adjust the the proportion or the the percentage of duty which you have already paid when you do the exports out of India. Next slide, please. Just to give an idea about the Indian duty structure, any dutiable good will basically attract the first four duties in the black, which is basically the basic duty of customs. The next one is the countervailing duty. The third one is the additional customs duty, and the fourth one is education cess. So any dutiable good will attract any of all these four. And there are also other duties which is known as like the effect duty. If customs or the government decides to effect a particular percentage of duty on a particular commodity or tariff, they can issue a notice and effect a different duty for these particular products. And there are preferential rate of duties which are basically with relevance to the free trade agreements we have with different countries, and these countries have a discounted duty structure of whatever. So these are coming under the preferential rate of duty. And of course the third one we all know is anti-dumping duty. If any commodity which is imported into India, if the price of that particular commodity is lower than the world market level, then the customs will impose an anti-dumping duty. And the fourth one is the safeguard duty. The Indian customs has a list of developed nations in terms of their import into India. If any one particular country's aggregate imports goes over 3%, then a safeguard duty is imposed. And the other scenario is the aggregate of all the developed nations countries import exceeds by 9%, then there is an application of safeguard duty as well. Next slide, please. Just to give an idea about the process in terms of the custom clearance, the way it is done is, the original import document, this slide is about the import custom clearance. Original import documents are required 3 days prior to the arrival of the vessel, and the customs is, you can file the bill of entry or the import entry through EDI, and after the arrival of the vessel at the seaport, the bill of entry will be assessed by the customs, and customs duty and taxes will be paid. Then you have to receive a delivery order from the steamship line, and the forwarder, and the customs examination will be completed at the CFS. Laden container cargo shall be removed from CFS for delivery to consignee's factory. Normally the process takes between 1 to 3 days for an FCL container. Out of it, 1 to 2 working days for the custom clearance and delivery planning. Now, most of the companies or the customers in India would prefer to clear the goods within 3 days because the free time allowed in the seaport or the customs is only 3 working days. So anything goes beyond 3 days, you will have to land up paying demurrages. So more often it is all cleared under 3 days if there is no issues on the documentation. Next slide, please. Okay, this is on the air import clearance process. Similarly, on the air freight part, customs will accept copies. On the sea freight part, you need the original documents to clear the goods, but on the air import part, copies is enough. Similarly, the EDA bill of entry or the import entry is filed with the customs. After arrival of the flight at the airport, the bill of entry will be assessed by customs and you pay the duty and taxes. Receive delivery order from airline and forwarder, and customs examination will be completed at the airport. Cargo will be moved out of the airport for delivery to consignee's location. The lead time to do this activity normally takes between 1 to 2 working days. And even on the air import front, the free time available is only for 3 days. And in India, most of the international flights, I would say like 75 to 80% of the international flights land only in the midnight. So normally the process goes to the second day of the arrival, and by the same day's evening, you would be in a position to clear customs and remove the freight out of airport. Next slide, please. This is for the process on export. Just wanted to share it with you, but I know most of the customers are planning to do imports into India, but the export process is very, very simple in India, both on the air front as well as the sea front. It normally takes about 1 to 2 working days to do custom clearance, and the documents required are invoice packing list, IEC number, AD code, and bank detail numbers. This IEC number, AD code description will come in the following slides. And the export entry is called shipping bill. It's again filed through the EDI in the air or sea customs, and customs assessment will be carried out in the airport or seaport. The factory stuff containers will be moved to the seaport, or the cargo for air shipment will be moved to the airport. If you have an LCL shipment, it will be moved to a CFS, and then the stuffing happens in the container freight station. On a FCL container, the seal is verified, cargo is examined for an LCL cargo, an airport for air shipments by the customs officer. The export processes are very, very simple. If all the documentation are perfect, you can even clear customs on export within 3 to 4 hours, subject to the documentations remaining perfect. And finally, once the customs officer assesses it, he gives the let export certificate, and the container will be handed over to the the carrier, or the air freight shipment will be handed over to the carrier. Normally, 90% of the export shipments are cleared within 1 day, but some cases it may go to the second day as well. Next slide, please. Just to give an idea of what is imported, IEC code and the authorized dealer code and the business identification number, these are the basic requirements to do imports or exports in India. The importer-exporter code is nothing but a code given by the Director General of Foreign Trade. Only when you have this code, you are allowed to do export or import. And this can be, earlier it used to be availed by the central office in Delhi, but now they have regional licensing authorities in all the 29 states. The next one is every export authorized dealer code. Every exporter who is involved in a foreign transaction should have a bank account, and this account should be informed to Indian Customs. And Reserve Bank of India, which is our federal bank, allots a code to each bank, and this code is called authorized dealer code. Customs links your IEC number and AD code together, and the exporter is also required to register authorized foreign exchange dealer code and open a current account in the designated bank, and all the drawback incentives are credited in these bank accounts. The third one is the business identification number. The exporters have to obtain PAN based on business identification number, from the Director General of Foreign Trade. Without a BIN number, you cannot file a shipping bill for clearance of export goods. Under the EDA system, PAN-based BIN is received online by the customs system from the DGFT. So these three are the mandatory requirements before even you start, doing your imports or exports in India. Next slide, please. There are certain schemes provided by the Indian customs in order to, reduce your duty or, take a redemption of duty or, to control your duty payout or whatever. As Dr. Abdul said, like the tariffs are very high in India and the duty structure is little complex. And in order to, help the exporters or importers, there are certain schemes which allows them to reduce the duty or even go for a free, duty structure. First one is the advance license scheme. This allows you to free import of inputs which are physically incorporated in the export product making. And you have a normal allowance for wastage with a specific export obligation in terms of value and quantity. What it means is you can go for an advance license, but you can go for a duty-free aspect in this, but you need to, you have an obligation in terms of exporting an X amount of, value, and by showing that, get an advance license. The next one is the export promotion of capital goods. Allows import of capital goods alone for pre-production, production, post-production, including, CKD and SKD. It allows computer software systems at 3% customs duty, subject to an export obligation equivalent to 8 times. Means, if you're asking for example, if your duty is say $100,000 in a year, you have to fulfill an export obligation of $800,000 on the export. So this will be monitored, a record and the register is maintained, and this particular scheme is very popular in India. A lot of companies bring their capital goods under this scheme. The next one is duty entitlement passbook scheme. This is to neutralize the incidence of customs duty on import content of export products, and the exporter is entitled for a duty credit as a specified percentage of freight on board. Again, this has to be applied through the Director General of Foreign Trade. The fourth one is the duty drawback scheme. For those transactions in which goods supplied to specific categories of beneficiary do leave the country and the payment for such supplies is received in either Indian rupees or foreign exchange. Fourth one is the deemed export. This refers to the transaction in which goods supplied do not leave country. For example, we have a lot of special economic zones in India, and these special economic zones are as good as foreign countries. There is no duty or taxes involved. Now, if you have to supply to these special economic zones inside India, it is considered as deemed exports, and payment of such supplies is received in Indian rupees or foreign exchange. Next slide, please. Just to give an idea about the privilege areas provided by the Indian government, first one is the most popular special economic zone in India. This is specifically dealing duty-free enclave. It is as good as a foreign country, and for the purpose of trade operation and duties and tariffs. These units can import, procure from domestic tariff area all types of goods and services without payment of duty. That means there is zero duty for this, nothing applies to them. And apart from this, you have export orient unit, electronics hardware technology park scheme, software technology park scheme, or biotechnology park scheme. So these schemes allow operating under duty-free regime for import procurement of all types of goods, including capital goods, without payment of duty for manufacture of goods for export. Now, these schemes are provided only when you have an obligation for export. So this is something which you need to keep in mind. And the next one which is developing is free trade warehousing zone, which is on the anvil. Indian government is planning to promote a free trade warehousing zone, and this infrastructure will also allow you to bring in goods from various neighboring countries and do a consolidation in India and then export it out. So this is likely to be starting in the mid of 2010, and most of the customers are looking eager for this particular scheme. Next one, please. So that's about it. If you have any questions, you can throw it back to us. Thank you.
Thank you very much for that very substantial presentation, Mr. Anand. Our next speaker will be Mr. Vimal Rath, who's the Manager of Planning, Engineering, and Operations Support with Federal Express FedEx in India. Mr. Rath?
Yeah, good morning everyone in US and good evening for participants from India. Barbara, can I control the movement of the slide?
You can, just let me know if you have any problem. Okay.
It's loading. Okay. Now what I want to cover, a lot of Mr. Anand has covered, so I'll be really quick on those areas. Rest of it, what I want to cover here is just the trade regulators and CBEC and key responsibilities of customs, goods classification, and understanding principles of restrictions, import and export governance, mode of export and import clearances. Okay. Now, regulatory structure is normally the trade policies are governed by Ministry of Commerce. They have Department of Commerce, and the most important for export imports here is Directorate General of Foreign Trade, and they govern the export import policy is governed by Ministry of Commerce. And Department of Commerce is headed by a secretary, and they are responsible for country's external trade, formulating the trade policies. The DGFT is Directorate General of Foreign Trade, is under Department of Commerce, and they have active participation in foreign trade policies. And the IEC code, the import rate upper code, it's like you have EIN number in the US. It's similar. Every company want to import and export, they must have a IEC. And import-export licenses and standard input-output norms, they are formulated for various drawback schemes. So all these are the key responsibilities of DGFT. Now, the Customs Department is under Ministry of Finance, Department of Revenue, and then under Department of Revenue, there is Central Board of Excise and Customs who govern the Customs Department. And Customs, there is a chairman of CBEC, and under him for Customs is Member Customs. These are the Customs policymaker sitting at a ministry level. They formulate the customs and excise duty, tariffs and rates, protection of domestic industry, prevention of smuggling, administrative matters, and they are the administrative authority for the subordinate organizations. Those include the custom houses, who are actually people, they also call them field formation. They are the ones who are at the airports and seaports clearing the shipments. The key responsibility of customs is collection of customs duty, safeguarding the financial interests, and implementing the policies and procedures framed by Ministry of Commerce. So the national economic commercial interests, combating economic and commercial frauds, regulating international trade within foreign trade guidelines, and illicit trafficking. We have to keep a cap on that. The classification of goods, whether it's import or export, the classification is the first step that needs to go in there. And India is a participant to WCO, and we adopted the WCO HS classification coding system way back in 1986. And our the customs and excise tariffs are fully aligned with HS codes. And the nomenclature combined with the duty rate is called, then we call it tariff. So the only differential between the customs tariff in US and India would be the rate of duty. Otherwise, the classification, what you adopt, is the same that we adopt in India. And this tariff part is governed by Tariff Act, and that's called tariff schedule. There are, for imports into India and even exports, more regarding the imports, because there are very few restrictions on export. So mainly you can classify them, all the goods, in three major categories. One is P, doesn't mean PFT, that means freely importable, or they also call it open general license, that you don't need any license to import commodities. These can be imported and exported freely, and there is restriction on import and export of these commodities. Restricted commodities are where you require a license or a certificate or a permission, and then fines and penalties may apply. Prohibited is that you cannot import and export into India. Now, the principle of restriction are the protecting the public morals and protecting the human and animal or plant life or health, protection of patents, trademarks, and copyrights, prevention of use of prison labor. So these are the various principles by which the restrictions are governed. Then import and export, as far as the law is concerned, they are governed by Customs Act, which was 1962, Customs Tariff Act, like I mentioned earlier, that's the duty rates and all. Foreign trade policy, the 5-year policy that is put down by Ministry of Commerce. It's reviewed every year. Like this, that is like everywhere in the world now, the animal protection and all. Arms Act, Antiques Act, we have Drugs and Cosmetic Act for cosmetics, and then there are some state government rules and regulations. Like Dr. Abdul in his presentation, he was talking about some cross borders. So India has 29 states. So if not 29, so then at least you'll have around 15 states where their local entries are also governed by certain rules, regulations, permissions, and the entry permits. Just to give you a brief on the import and export clearance on the air transportation. There are two main categories in air transportation, the express or the courier mode they call, and then we have the formal entry or the entries those are filed in the cargo mode. So there are three main governing areas or filters, as you can say, that it's the contents, gems and jewelry, and anything related to the export promotion schemes like Mr. Anand mentioned in details, and repair and return. So these categories we can clear in express mode if it requires a formal entry, and if on the export side, the samples valuing more than 50,000, gifts valuing more than 25,000, or anything with commercial transaction, again a formal exit from the country, and single piece shipment weighing more than 32 kgs or dimensions. These are basically the weight and size are by the airline security they put. So these are these three categories. You need a formal exit from the country. I'm sorry, it should be formal exit, not entry. And similarly, on the import side, if the low value documents, low value and medium value, these three categories are shown in this presentation, they don't require a formal entry, can be cleared on express or courier bill of entry. However, the high value requires a formal entry. So the documents, they just X-ray, you just make one simple declaration for documents. And low value is gifts and samples up to 10,000 rupees or $200. India doesn't follow the de minimis entirely. We have a selective de minimis, I would say, for it's for samples and gifts up to $200. If it is not a sample, not a gift, and the value is still within $200, it doesn't fall under de minimis, there is a duty on it. So that selective de minimis on low value that can be in express mode. The medium value, that is more than 10,000 rupees or between $200 to $2,000. They are cleared on, again, express entry with examination and duty rate as applicable. The high value require a formal entry. So the value that I've mentioned above here, $200, $2,000, this is the landed value of the goods. So it's not declared value, it's declared value plus insurance plus freight plus 1% port charges. Now here I've given a little bit of comparison on express and formal entry, the paperwork and the procedure-wise. On express clearance, we have the provision of pre-clearance. So before arrival of the flight, the assessment and release can be procured from customs. So on arrival, they do examination and final release. However, in formal entry, pre-clearance process is tedious. It's not as simple as in the express entry, and 90% of the shipments arriving in express mode are cleared within 4 to 6 hours of arrival. However, on formal entry, it may take 1 day at least. Clearance up to 100,000, that is the restriction on express mode of clearance. However, on the formal side, there is no value limit. Consignee participation is required on clearance only more than $2,000. However, every entry on formal entry, you need consignee to participate. You need certain documents from consignee, the authorization letters, and the valuation declarations. The express clearance in Delhi and Bombay are 24/7, and the clearance is under license if the consignee's importer is availing any benefit, then that is not permissible on express side. It has to be on a formal entry. And duty, normally the express companies, they advance the duty on behalf of the customer and take the reimbursement on delivery. And as practice, normally on the formal side, it's the consignee who advances the duty. So the main import clearance paperwork, although there are more, but those are more specific to the different commodities. This is the general paperwork that you will need for all kind of shipments: airbill, commercial invoice, packing list, IEC, and the authority letter from consignee that is required on express side only more than $2,000. However, on the formal clearance side, you need it for each and every shipment. And same goes with the valuation declaration. The main pain points that we have on import clearances, not everything is attributed to customs. There are other regulators like airport regulators and all. They also, their procedures and also cause some delays. The IGM filing delays. The IGM or the import manifest needs to be filed by the carrier at least 4 hours before arrival of the flight. So if that is delayed, that is the starting point for the import clearance. That needs to be filed first. And then if it is on the cargo side, the cargo arrival notice or the delivery order, in case consignee is opting for his own broker to clear, if that is delayed, the entire process gets delayed. On the airport side, segregation and location allocation, like Mr. Anand said, most of the flights arrive during the night, so that delays the process. And shipment getting into the warehouse and getting a location, and without that, your examination cannot start. On the clearance delay, the disputes are normally on valuation and classification, plus the other regulatory bodies like ADCs, truck controller, wildlife, or any licenses. Those are the main areas where it is on import happen. On export, I've not touched too much because export is pretty quick, and in express side, it's just about a 3-hour activity, and on the positive side, 4 to 5 hours. Yeah. That's all I have, and my contact details. If anybody has questions, can please contact me.
Okay.
Thank you.
Thank you very much, Mr. Ross, for that very interesting presentation with lots of good information, I think, from all of our speakers. At this point, we will have question and answer time. Operator, Christine, are you there?
Yes,
Can you open the lines for questions for us?
Yes, thank you. At this time, we'd like to begin the question and answer session of conference. If you would like to ask a question, please press star, then 1. You must record your first and last name clearly. To withdraw your question, you may press star, then 2. Once again, if you would like to ask a question at this time, please press star, then 1, and record your first and last name clearly. One moment for the first question, please. The first question comes from Patty Ellison. You may ask your question.
Are express bill ladings allowed to clear shipments in India on ocean?
Can I ask one of our customs experts to answer that?
Yes, it is allowed.
Okay, thank you.
The next question comes from John Balsam. You may ask your question.
Yes, thank you. Specific question dealing with getting a RMA unit back out of India to our office. We basically ship a network appliance that has a standard computer server with proprietary software on it. So we originally sold and imported into India a number of the units at full value, and although they asked us to break out the hardware portion with the software portion. We normally don't do that, but we did in this case. One of those units failed just recently. We shipped a replacement unit to them, and in our cases, we shipped at whatever the insured value is, which is really just the cost of the the hardware in that case. Got the unit in successfully, and the value was, for example, $3,000, where the original cost was $20,000. That was on the original commercial invoice. But now we can't get the unit back out because our customer is saying that they need to value that unit at like $20,000, and we're concerned that we'll end up paying some type of a tax or duty on that value versus the value of the unit that we actually replaced with it. So my question is, what should we value that unit that we need to get returned back from India?
How long back this original unit was brought into India?
Well, it was imported last year, and we've imported probably 15 of those units, and this is just one unit that's failed, and we already replaced it. We already sent them a new unit. We're just trying to get the old unit back out, and we have a conflict, I guess, in how much we should value that unit for. And we don't really care what they value it as long as we're not responsible for any type of duty or tariff on the way back out.
There are no export duties out of India.
Okay.
The valuation they need for the export documentation, and if it was it's an old unit, they can always use a depreciated value, and accordingly they can export it out. Advisable is that there is a repair and return thing that they should have availed and could have sent the unit back earlier, but they can export it, but there is no export duty in that.
Okay. So, I mean, just to clarify, we valued the replacement unit at $3,000. We thought that that's what they should value it when they're asking for a value, that they should value it at $3,000 to get it back out of the country. But they seem to think that they need to value it at whatever the original cost was.
$3,000 is the original cost?
No, $20,000 was the original cost, and that was on the original commercial invoice when they first imported it last year. We got a replacement unit into them with a $3,000 value because that's just the cost of the hardware, and that's what we said that should be the value that they place on the faulty unit to ship it back out. And they seem to think that they need to put the original value of $20,000 on that unit. That's what we can't understand.
Yeah, I think that's right, and they have to. All they can do is depreciate, put a 1-year depreciation on it, and put the value around whatever the depreciation year they must be taking. If it is 5 years, then 4,000 less. That is 15,000 can be the depreciated value.
Okay. All right. Thank you.
Sure.
The next question comes from Steve Schott. You may ask your question.
Yes, I was just wondering what's the price differential between express clearance and your normal clearance, that last item that they covered? How much more does it cost you to do express clearance?
The clearance cost, I would say in the express side, normally the clearance cost is included in your transportation.
Okay.
And the duties and tax are same on both the sides. The same tariff that is followed on express as a free clearance. For express clearance, if it is within $2,000, there is no clearance cost billed separately.
Okay. All right. Thank you.
Sure.
The next question comes from Ken Anselm. You may ask your question.
On the documentation required to enter the country, I noticed value declaration. Can you explain what constitutes value declaration, and in particular when shipping used equipment into the country as well as new? And then a secondary question is, does Customs buy interest on the duties when the equipment is in bonded warehouses?
Yeah. See, when the cargo is imported into India and it is getting bonded in a warehouse, the Customs gives 90 days interest-free days, and after 90 days, it is 15% per annum on the duty amount, which is being levied by the Customs as interest.
And what about the value declaration? What constitutes value declarations? What is accepted?
Are you talking about the second-hand machinery or the new machineries?
Both.
See, the value declaration for a new one is your actual value which you declare in the commercial invoice. But Customs also has, the identical rates of those equipments in India. So if it matches with that, then it works fine. But when it comes to a second-hand machinery, it depends on, how you depreciate the value of used machinery. Normally, Customs allows you to depreciate up to 70% of the, the original value of the used machinery, not beyond that. But even then, whenever a second-hand machinery comes inside India, Customs has authorized certified chartered engineers. So these chartered engineers will assess the used machinery, and they give the value of the, they make an assessment and, arrive at a value, and this value will be announced to Customs and the importer. So irrespective of whether you depreciate 50% or 70%, the chartered engineer's certification or the assessment of the value is final.
On new equipment, what is acceptable for a declaration? The commercial invoice has not been acceptable in the past. We've had to provide additional value declarations, and that's been a bit confusing.
For a used machinery importation into India, the chartered engineers which have been listed by the Customs, they will give the value, they will assess the equipment, and they will recommend the value to the Customs. So the invoice value, the chartered engineer given value, and the customs transaction value, whichever is the higher, the customs will levy duty on the higher value. This is one area. And the other area is the customs always go by a transaction value rules for all the new products. Okay, if it is your goods is a new machine or new equipment which is coming into India, and that the value declared in your invoice should match with the value, the record price of the customs. If that is the case, the customs will very well accept your invoice value and levy duty on that.
Well, we've been asked for product catalogs and documentation to publish pricing lists and that type of thing. And not all of our manufacturers have published price lists. So it's been a matter of how do we generate a price list when we don't have a publicly published price list.
Okay, this would be a case where you bring in a machinery, and is it a new kind of sophisticated machinery?
It's new equipment, sophisticated. I don't know the answer to that question.
No, because I mean, if there is no transaction price available for a particular equipment when it arrives, and in that case, customs may require to provide the product catalog and then you know the price list. But otherwise, predominantly, most of the assessment happens with the commercial invoice of the customer. Unless if the equipment is new into India and there is no transaction value for it in the customer.
Okay. Thank you.
The next question comes from Jose Whitman. You may ask your question.
Hi, thank you. I have a couple questions actually. Number one, I have a similar situation like the one just expressed. We just sent a couple samples to India from one of our customers. The value of the product, real value is $85, and customs had assessed the value of the product for $715. Seems to me like custom doesn't have any kind of tariff in there, and they just check in Google, or I have no idea how they get into this. However, my customer is refusing to pay the duties for $750 because that will set a precedent for the next importation. Is there anything that can be done about that? We have public price list. We can certify any price list with the chambers of commerce and so on. Is there anything that we can do about that?
Has the duty been paid and shipment released?
No. The customer actually, we send this by FedEx, and the customer actually refuses shipment because the custom duty was more than $250. He was afraid of taking this and then setting the precedent custom that the real value is $715, which is not the case on this product. This is not the first time that we
can always challenge stand on value on that. Like you said, you have some value evidence available.
Okay.
We can definitely challenge customs on the value if it's a documentation to provide to prove the value is 85 plus. We can definitely do that. It was sent through FedEx, you said?
Yes. Yep.
Okay. You have my email ID, and if you can send me the details, I'll personally look into. I think we can challenge it. Yes.
Okay. Wonderful. The last two questions is first about the free zone in India. It works like any other free zone all over the world. So the product basically is stationary in there, and they pay duties only when it's released into the country.
Yeah. The free trade zone, as you said, it's like any other free trade zone in the world. But if you want to sell it for the domestic market or for the Indian consumption, then you have to pay the local duties.
Okay. And on the event that there is no sale internally, could be re-exported?
I beg your pardon, can you please come again?
That in the event that the product is not consumed or sold into the domestic market in India, can I re-export that product to the region, to other countries?
You can. You can.
Okay.
The special economic zones or the free trade zones are basically foreign countries inside India.
Okay.
So you can bring in, take it out. As long as you don't sell it for domestic consumption, you don't have to pay any duties or taxes.
Okay. Thank you.
The next question comes from Louis Rothberg. You may ask your question.
Oh, yes. My question is just simple. I was not able to write fast enough to get some of the excellent information. Will we be given a set of these charts?
Yes, I can answer that for you. Yes, I will be sending out the slides, and there'll be a recorded version also of the webinar available afterwards.
All right. When can we anticipate receiving the slides? That's it.
Within the next day.
All right. Thank you very much.
The next question comes from Abe Thomas. You may ask your question.
Yeah, hi. Thank you very much. We are exporters of musical instruments for education to India. In our case, we had shipped some harmonicas into India, and that was being used by a customer, and one of the customers needed one of the harmonicas repaired. So we sent it out from India via EMS post and have an outbound EMS number for it. It went to Japan, Suzuki Japan, who repaired the harmonica and then sent it back via EMS post. And on the export declaration, they have marked clearly that this is a repaired harmonica, no commercial value, and with the marking of $5 for customs purposes. However, when it arrived in India, the customs officer assessed or asked our employee in Bangalore what the value of the product is, and he gave a rupee value, 6,000 rupees. And even though it was marked on there that it was a repaired harmonica brought back with no commercial value, they assessed a duty on it of approximately 1,900 rupees. And of course, after having visited these folks 3 or 4 times and spending 3 or 4 days there, I just told them, look, just pay the clearance fee because it works out to about $40 US. Time is worth more money than this. So, how do we avoid this for any type of future imports where a product needs to be sent out for repair and needs to come back in where we are not assessed duty twice on the same product?
Okay, on the express or the cargo side, on EMS I'm not very aware, but on the express and cargo side, when we export anything for repair and it comes back, we declare at the time of export that this is going for a repair and return. And the first import documentation is shown that's the other thing which is very important is in such cases is having a very visible and clear marks and number endorsed by customs, the serial numbers and all. At the time of import, the invoice that's coming in should give the value of repair cost and transportation. So that's only portion which is dutiable when it comes back here.
I see. Well, this is in India they call these mouth organs, harmonicas. There is no serial number on it. In fact, that is one of the questions that the customs officer asked. How do we know that this is not a new product and it is a repaired product? Well, there was 1 month worth of email communications that took place on this thing from the customer to the factory requesting us to please send it back for repair. We presented all of that documents, and we told them there is no such thing as a serial number on this. However, here is the outbound EMS numbers. But, this is interesting. You say that you are with FedEx, sir? Are you with FedEx?
Pardon me?
Are you with FedEx?
Yes, I am, sir.
Okay, so that's great, because in the future, this is something that we can use, because this way there is, you just mentioned that for an export of this, you have to have a declaration. Well, at the Postal Service or at the EMS, we did not have any way to document that this was going out. However, we presented them
yeah,
the
that's
number.
the problem because that's very important to match. And we recently, our own equipment we sent out, and we paid duty only on the repair cost. Equipment worth $1,800 that we imported from US and for repairs, and the repair cost was just $25, and the transportation another $10. So on return we duty only on $35, not $1,800 second.
Is there any way to now go back to the customs? And the customer was quite upset to know about this, but we took care of customer care as such. We paid for it ourselves. We, by the way, have an office in India. We have Thomas Music Corporation has opened an office in India, and we have a presence there. And we wanted to give the same level of service that we give to customers here in the U.S. Therefore, we handled it ourselves. Now, if it was being sent to a customer directly, they do not have an import-export code number, do they? A consumer.
If it is a personal shipment, then the customs officer on the ship, the assistant commissioner, we just have to make a request to him. He allows on a customs IC code number. They have one reserved for such shipments.
I see. For direct to customers.
Yeah, for direct one-time importer who's not a regular importer and exporter, he won't have a IC code. So then we make a request to the Assistant Commissioner of Customs, and he allows them to file that entry on that particular code.
I see. Thank you very much for your assistance.
And as far as
yeah, go ahead.
You're welcome. As far as your question about if we go to customs back on your harmonica case, we can always challenge, but I don't see too much for success coming on this because there is no proof of export plus the marks and numbers, and there's no identification for that. So it can always be challenged, but the chances here of getting any reimbursement from customs in this particular case, I see big chance.
Well, most of the mouth organs or the harmonicas do not have a marking on them as far as a serial number is concerned. How do we address that? How do you address it if one was to be sent out that way? We do have one harmonica, one mouth organ that costs $3,000. That has a serial number on it. But there are other items such as this where most musical instruments don't have, well, electronic instruments do, but I'm talking about, mouth organs do not have serial numbers put on them. How?
You know what? Maybe should we? I think there are maybe other questions in queue.
Yes.
Can we talk about that specific case offline?
Yes, surely can.
Is that okay, Mr.
Yes.
Thomas?
Yes, and I appreciate your answers. You've given me some good tips on future shipments. We will contact you for next. Thank you.
Yeah, and you have the contact information and the direct email, so you can follow up on that. That certainly.
Thank you very much.
Thank you.
Barbara, and thank you very much, everyone.
Okay. Operator, are there other questions?
Yes, ma'am. The next question comes from Amy Jacker. You may ask your question.
Hi, my question's pretty simple. I just want to find out if original signed commercial invoices are always required in India.
Yes, it is always required for the sea shipments, but for air shipments, copies are fine.
Of the commercial invoice, not of the airway bill.
Commercial invoice.
Okay, thank you.
The next question comes from Deloria Williams. You may ask your question.
Yes, we are actually re-exporters of mosquito control products, and we're buying goods ex-works from a factory in Karur, and in full container quantities. And what's happening is our freight forwarder is shipping it from Karur to Chennai in trucks. And they said that they're doing that because of the inspection that has to take place in Chennai. And what I suggested to them is to do it in containers, and they said that they could not do it. So I guess my question is, you know, what's the reason behind this, and is there any other way that we could have them to ship containers and stuff them at the factory?
What is the product, madam?
They're mosquito nets?
Mosquito nets?
Yes.
There are two types of exportation which can be affected. One type is the manufacturer in India can stuff the cargo in their warehouse in a container with a central excise or customs supervision, and that can be taken to Chennai port and can be exported. This is one way. The other way is they can move the cargo to Chennai container freight stations, keep the cargo there, do the customs examination, stuff the cargo in a container, and they can move it to the Chennai port. These are the two ways that that the manufacturer can export it.
Okay, so the second one is that's basically what they're doing now. They're shipping trucks and then examining it, then stuffing it at the port.
You can prefer the first one also, but the exporter in India has to be registered with the in the jurisdictional central excise authority or the customs authority to carry out the customs examination in their own warehouse.
Okay, what would be involved in doing that? What would be the cost to have that done, if any?
Yeah, it is just a registration. It is just a registration of the manufacturer with the concerned jurisdictional authorities of customs and central excise, and they have to make a special application after the registration to carry out a customs examination or a central excise examination inside their warehouse. And they have been given a special authority also by the customs and the central excise to do a self-sealing themselves in their own warehouse.
Okay, so then that official would just come out and then do the inspection. Okay. Okay. And actually, I had another question. This is just a short one. Where can we obtain a Indian national holiday schedule?
Indian national?
It's a national holiday schedule, so that we'll know what the holidays, because we always are finding out kind of after the fact that there's a holiday there.
Holiday list.
Holiday list, right?
See, there is not the listed holidays as per the Indian government is only 12. But for customs it varies. I mean, it varies from zone to zone. There is no uniform holiday for the whole of Indian customs. It is different in Bombay, it is different in Chennai. So we can send it across to you, not a problem.
You can send that? Okay.
Tell me which is the location you are looking for so that that particular customs jurisdiction holiday list I can send it across.
Okay, that will be for Chennai and for Haldia Port.
Okay. You can send it across.
So go ahead and maybe follow up by email with one of our customs experts and ask them for that. That's probably the best way.
Okay, I'll do that. Thank you.
Thank you.
The next question comes from Lynn Brannigan. You may ask your question.
Hi, good morning. We are a manufacturer and exporter of automotive lubricants, chemicals, and we have not attempted to export to the Indian market yet, but it's on my radar for this year. So my question goes back to the BIN number. We use a freight forwarder for all of our shipments, and then we don't get into any of the import on the other side. So is this BIN number essential for us before we start exporting?
No, if you are exporting it, it is not applicable to you. All those BIN number or IEC is applicable only to the importer in India.
Excellent. Thank you.
The next question comes from Margaret Bunold. You may ask your question.
Yes, thank you. I have two questions. We are a manufacturer of telecommunications equipment. We would like to do a demonstration for a potential client in India. This would result in very, very substantial duties and taxes. We anticipate, based on the numbers that we've seen, it could be as much as $500,000 in duties and taxes. Since India does not accept the ATA Carnet, what are the opportunities for a duty-free temporary import into India?
Yeah. As you referred rightly, the ATA Carnet is the best way to import into India, and you will face no hassle with the Indian government to import it as a ATA carnet, provided your consignee in India should have the supporting documents required by the notification, customs notification. If those documents are in hand, it can be imported as a ATA carnet without payment of any duties. This is one way. The other way around is without payment of duty is you can import it as a temporary import, pay the duty during clearance of customs during importation in India. Then after completing all the exhibitions and displays, it can be re-exported. After re-exportation, whatever the duties paid can be taken as a drawback from the customs by the consignee in India. But it cannot be 100% refund. It may be on a slab rate based on the period of usage.
Understood. A second question we have is we've recently run into several requests for chartered engineering certificates for used equipment coming into the country. We have some development happening in country, and we haven't had this come up before. Is this something that's always been a requirement but not often requested, or has there been a regulatory change?
It is a mandatory requirement for all the used equipment imported into India. There are two ways. One is the customs has listed the chartered engineers which have been nominated by the customs. These chartered engineers have branches all over the world. So during your exportation to India, you can use one of the chartered engineers who have been in the list, so that to avoid one more examination in India. But this chartered engineer certification for a used equipment is a mandatory for Indian importers.
And if I send you an email under separate cover, could you direct me to the list of pre-approved chartered engineers for the U.S.?
Definitely I can do it.
Okay, and this is Mr. Anand?
Yes.
Thank you. Did you want to follow up? Okay. Thank you.
The next question comes from Paul Lynch. You may ask your question.
Yes, thank you. My question is this. First of all, we are a manufacturer of medium value capital goods on the order, typical order value $300,000 plus. Is there a way, on occasion, we would be asked to handle an order all the way through FOB delivered to the job site? Is there a way to quickly and conveniently get a decent estimate of what our total duty, taxes, fees, etc. would be for purposes of estimating what the cost would be to deliver to a job site in India?
You can do an approximate estimation of your duties into India. Just send me across your email ID and the contact details. We can give you the link. And in fact, Indian Customs is coming up with their user-friendly website where you just have to go there and put the HTS classification, and it will list out all the possible duties into India.
Okay, and who's speaking, please?
Vijay Anand from Expeditors.
No, I'm sorry, your name, sir?
Expeditors.
Oh, okay, very good. I'll send you an email. One more quick question, if I may. In the event that there's a problem with a product, once it's installed and we have to dispatch an engineer and or replacement parts, what is the impact of that type of thing on duties and customs on parts that are replacing something that has failed on a job site?
So you're talking about replacement parts, or?
Yes, sir. Under warranty service, a part that was originally shipped in has failed, and a replacement part must be sent or installed. Do we have to pay duty and everything else on that replacement part?
Right. It depends actually. But as of now, whatever the replacement parts, warranty parts which is coming into India is being levied for customs duty.
So in other words, the answer is basically yes, the duty must be paid on any replacement parts.
Yeah.
Okay. Okay, thank you very much.
The next question comes from Tina Zabrinsky. You may ask your question.
Yes, thank you. We're a manufacturer of vibration data collectors, hardware and software, and we are doing business with a partner in India. They're basically a distributor for us, and we are exporting our data collectors to them to utilize in service work. They collect the data, and then they send that to us for analysis. So the data collectors are not for sale. They're for their use only, to collect the data, and then get it back to us via email or over the Internet. What kind of value should we assess on the data collectors? These are used pieces of equipment, and they're not reselling them. We've been using our COGS. Is that correct?
I'm sorry, I don't follow you. Can you please repeat it?
Sure. We basically have a distributor in India, a partner we're working with, and what they are going to do is we send them our data collector to go out and collect data on machinery with various customers, and then they will, via the Internet, send that data to us for analysis. The problem we are having is what value to put on the data collectors when we export them. They're used pieces of equipment, and they are not selling them. They're just utilizing them. We own them.
Yeah, now I understand. See, the valuation should always be your actual pricing. Actual pricing of the product has to be mentioned in your invoices for the export into India, because the customs have something called the transaction value rules, which is being coined by the Customs Act Section 14, transaction values. So customs always go by the actual price of the product.
Even if you don't put a price for these particular data collectors, the customs will have a value for these data collectors, and they will calculate the duty accordingly.
Well, we're putting a price, but we were putting our cost of goods sold, our COGS, because they're not selling them and they're used pieces of equipment.
So after the usage, is this data collectors are sent back?
We retain ownership, so they might have them for a year or even 2 years. They would only send them back to us for repair or if we terminated our relationship with them. But we retain ownership.
No, you retain ownership, but do you get it back out of India, or it remains here?
It would be remaining in India as long as we had a relationship with this company.
Yeah, so it's simple. I mean, you have to declare a value for these data collectors, and whatever is the price of this data collectors has to be, displayed in the invoice.
Okay, and do we put anything in there? Does it help the end user, because the company we're working with is getting assessed high duties, evidently? And does it help to put that it's not for resale?
Oh, it is immaterial that it is for a resale or for your own consumption or for the trading activity in India. It is immaterial for customs. The valuation is, the customs will go for valuation based on the actual price of the product. For example, whatever the same product, if you are selling it to a third party, the same price has to be mentioned for your internal transactions and even for your own use in India.
Okay, thank you.
I think that's actually all the time we have. We've gone just 2 minutes over, and if there are additional questions that we didn't get a chance to answer, please feel free to contact any of the speakers that are listed on the screen. I'd like to thank all of our participants for being with us today, and for further information on exporting, I hope you will consult www.export.gov or call 1-800-USA-TRADE. And I'd also like to thank our speakers for being a resource to our U.S. exporters. I think we got a lot of good information out there today, and so we're very appreciative. Thanks again to everyone for joining us. This is the end of the call.
Yeah, Barbara, just a second.
Oh, sure. Okay, one more thing.
Yeah, this is Mala from Chennai. I think Mr. Vijay